Friends, in this podcast, I am going to talk to you about the relevance of Nifty to your investing. The Nifty 50 remains a constant in our lives. We tend to compare its movements regularly. Most people tend to check it every 5 minutes during trading hours. We measure investment performance relative to the Nifty 50. We guess the market mood and judge sentiment on the basis of what happens to the Nifty. So the Nifty has effectively remained a constant in every investor's life. 25 years later, it's doing its 26th. The Nifty has grown beyond just one index. The NSE has a company called NSE Indices Limited, which again has a index management subcommittee which runs all these indices to a certain framework. Effectively, the framework decides the changes. And if companies fit those changes, they will keep moving. So how much is this movement? How strong has the movement been? I read in an analysis done by a colleague that between 2005 and 2017, 45 companies entered the Nifty and 44 went out. So that has been the level of dynamism in the Nifty. So it's been an in and out game. The odd number between the entry and exit relates to Tata Motors DVR. So if you see the subsequent 3 years, we could add another 14 companies to that list. So effectively, the Tata Motors DVR went out, and 44 plus 14 would make it 58, and you have the Tata Motors DVR. So 59 changes have happened over a 15-year period, roughly 15-16-year period. So that is the extent of change in the Nifty. And has it really been consistent? These changes, have there been directional reversals? And how soon has it been? A very interesting story pertains to Dr. Reddy Lab. It's had this in-out many times. In 1997, it went out of the Nifty, only to return in 1999. And then in 2008, it went out of the Nifty, only to return again in 2010. It has been there since then. A company which goes out of the Nifty 100 in 2017 finds its way into the Nifty 50 in 2020. I'm talking about DV's Labs. So the changes have been extremely dynamic, and we've had changes all the time. That is the track record of the Nifty. These changes happen twice every year, in January and July. We have seen fair share of changes in the last 3 or 4 years. In 2018, you had 4 exits: Lupin, Bosch, Ambuja Cement and Aurobindo Pharma. And the replacements were JSW Steel, Bajaj Finance, Grasim and Titan. 2019, you saw 2 exits: Indiabulls and HPCL, and 2 entries: Nestle and Britannia. 2020 has been quite a dynamic year. You had 4 exits: Yes Bank, Vedanta, Z and Bharti Infratel, and 4 entries: Shree Cement, HDFC Life, SBI Life and TV Slab. 2017 had some very interesting changes. You had 3 entries. You had Bajaj Finance, HPCL and UPL, and 4 exits. You had Tata Motor DVR, Tata Power, ACC and Bank of Baroda. Interestingly, HPCL, which came in 2017, went out in 2019. So these changes, I mentioned Dr. Reddy's instance also. In 2 years, many companies go out. Why does this happen? Because the time they come in probably reflects the best performance which gets captured in the index filters, the inclusion filters. The framework captures it and then it draws it into the index. Within 2 years, there is a reversion to mean. in the company's performance and in the parameters which the index management committee applies. So the framework again rejects the very same company, or some other company does better. So this will be the order of the game. While the Nifty is a constant in our lives, the Nifty is not exactly constant in its way of functioning. So why do we obsess so much about the Nifty? If you are going to have so many changes in the Nifty, when a company goes out, there will be an impact cost. When a company comes in, there will be an impact cost. On average, you're seeing 4 companies change every year. So every decade, 90% of the Nifty will change roughly. I mean, in the sense, not 90% of the companies, but so many changes happen. 45 to 50 changes happen over 10, 12 years. And I don't see this changing. So, investing should think beyond indices. And I don't think that just investing in an index is prudent. That's a Western example that has worked over a period of time, which is not enough to generalize. And I think investment alpha is something that should be sought through bottom-up investing, both within and outside the Nifty. Investors should bear these facts in mind when they try to constantly compare themselves with Nifty during those brief periods when Nifty does better than their portfolio. Because that could be due to these kind of changes, concentration of performance in one or two sectors, which is happening all the time in the Nifty. And understand that such concentrated performance is often not sustainable, and capturing it in your portfolio should not be a priority. And if somebody really wants to have a portfolio of compounders and great businesses, he need not necessarily be comparing himself with the Nifty all the time. Just use it as a broad benchmark which tells you where the sentiment is, and don't think too hard about the Nifty. Thank you very much for watching this podcast, and do share it with your colleagues.